Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn that how we can identify IFC candle. So first of all, you need to understand what is IFC. IFC means institutional funding candle which taken out the all money to collect all money in terms of the structure, not terms of the candlestick, which candle taken out the previous measure low or high and then close or below it to confirm that market looking for the reversal, looking for the continuation. And these type of candlestick most of the time you will see on the top of the structure and bottom of the structure these thing, and this is a strong indication for the reversal. Once market taken out the liquidity, you can simply wait for lower time frame confirmation, then you can buy or sell in a lower time frame after collecting all money by taking out the measure high and measure low. So if market momentum is a bullish and market taken out the previous measure low and then create something like this candlestick, this one is called IFC because market taken out the previous low, which one is here, and this can be your inducement, this can be your measure low. Simply you can buy on this candle. This move is called our single leg move, or you can buy here because this one is our IFC candle which taken out the previous candle low, and you can say also which candle taken out the previous inducement, and this is very strong candlestick. Once market taken out this one, you can simply buy on the next candle mitigation, wait for mitigation, something like this, okay, and then you can buy here in a lower time frame confirmation, which will be chalk, boss, flip, entry module. If sometime what happened, market mitigate this order block like this, okay, and then push higher high, but market not create any imbalance. Remember one thing, market must be proper imbalance to confirm this IFC candle to confirm a valid buy, but sometime market not create move something like this. So what happen here, if market not create any inducement, simply you can refine this one like this one, because this shadow we can use as a demand zone because this candle taken out the previous candle low, which is here like this, okay. So simply if price tap here on this zone, simply you can buy here because market momentum is a bullish. And remember one thing is here, if market momentum bullish and market taken out the previous high, sweep this high like this, okay, which one is here in the second diagram, market taken out the previous high and sweep just close below it like this, okay. And one more thing, this candle color doesn't matter, sometimes this can be bullish, sometimes this can be bearish, doesn't matter, rule will be same. But if market momentum is a bullish taken out the previous measure high, something like this, so this is our low probability, or you can say short term sell. Why? Because momentum is a bullish and you are selling against the trend, so this can be a short term sell and maybe, but market taken out the previous measure low, which one is here, and sweep like this, so this can be our strong buy because momentum is a bullish and market taken out the previous low, which is a strong indication for the reversal. Why I am saying this one, because this type of candlestick act like a POI, which can be used for the buy and sell in a lower time frame confirmation, and same scenario will be applicable if market momentum is a bearish. So this one is our bearish diagram. As you can see here, same thing happen here, market momentum is a bearish, market taken out the previous measure inducement, or you can say previous measure high. After taking out the previous measure high, market must be sweep something like this, and this candle must be close below it, just below it, right. So once market taken out this liquidity, why? Because market collect all money is here. This is a strong indication that this candle taken out the all money which is here, right. So once market taken out this money, which one is here, then you can sell here on this candle, which one is here, and this one is entire candle act like our POI, and this one is our IFC candle, institutional funding candle. And same scenario applicable here, price must be have proper imbalance is here. If not imbalance, then you can use this shadow is here. If this shadow already mitigate something like this, so this is a not a valid here, you can simply use this one, or you can simply drag here like this, as we have mentioned in a to identification order block. So simply we can drag on the next candle as we have discussed in a order block series. So simply we can move on the next candle until we found the proper imbalance or find the proper unmatched. So this is a way to identification IFC institutional funding candle, and same process will be here. If market taken out the measure low, which one is here, once market taken out the measure low is here, then similar thing will be applicable here, taken out this low, and candle color doesn't matter, same, this can be a bearish, this can be a bullish, but this candle is a larger in a shadow and small body. You can say this one is our like a shooting star hammer candle looks like, and we can identify, if we can easily identify. Simply you have to focus on measure high or low which taken out by any candle. You can simply mark them as a PY, then we can buy or sell. Those candlestick act like a PY IFC. So let me show you exactly on chart, then you can understand very easily. So this is a chart of GBP USD in a 15-minute time frame. Now I'm going to show you exactly that how we can identify IFC candle. Simply, first of all, you have to identify where is our trend. So in this case, you can see here market momentum is completely bearish. Market continue pushing downside and creating lower lows, and when market momentum is bearish and taking out the previous measure high and sweep the previous measure high and create IFC candle, as you know, hammer type of candle and shooting star, and there are different type of candle which include long shadow and small body. So in this case, same thing happen here. As we know, market momentum is completely bearish and market taken out this previous high, which one is here. Once market taken out the previous high and after taking out the previous high, market close below it. Once market taken out the previous measure high, immediately you can sell into lower time frame confirmation. But remember, this is a bearish trend. If same thing happen in a bullish trend, you can also sell, but for the short term, as we know, because market momentum if bullish, then you can sell for the short term, but market momentum is a bearish, you can sell for the longer term because market is looking for the continuation in a downside move. So simply you can sell here in a two way. First one is here, you can switch into lower time frame in 1 minute structure, then you can sell. And the next entry is here, if market break this low, which one is a change of character, and next possible zone is here for the sell. But this is applicable if market momentum is a bearish, and this one is a not applicable if market momentum is a bullish and market taken out the previous high, because in the first move maybe market take a small pullback and the next time market continue go higher and close above it to confirm this break of structure. So you can't sell here in the next attempt, but you can sell here in a first attempt in a both scenario if market momentum is a bullish and bearish, doesn't matter. So let's see what happened next here after this one. This one is our previous measure high, which one is a sweep here, and this one create a IFC candle at this point, and this is our highest candle which taken out the previous measure high and collect all money is here, and simply you can switch into lower time frame for the sell. Now let me show you exactly on a 1 minute chart, then you can understand more better than how you can take entry. And after sweep the previous measure high or low, you can simply sell based on the chalk, pause and flip entry model, which will be covered in upcoming chapter. So first of all, look at this one chart, and this one is our 1 minute chart. And if you are using 15 minute as a higher time frame, then you have 1 minute for entry time frame. If you are using H1 for the higher time frame, then you have to take entry based on the 5 minute chart. If you are using 4 hour as a higher time frame, then 15 minute for the entry time frame. So let's see what happened next here. In this case, you have to identify where is our recent low, because market momentum is a bullish. Once market break the previous recent low, which act like a change of character. So this one is our first pullback is here, which is must be market break this one. If market break this one, this is called our change of character, and before entry price must be taken out the inducement before the sell. Entry types explanation will be covered in upcoming chapters, so no need to worry anything here. So let's see what happened next here after this move. At this point, as you can see here, market small giving reaction to the upside. Why? Because this one is our pullback is here, and this one is our demand zone, means a order block is here, and market tap here and giving a small reaction here. It means this is our demand to supply flip entry module applicable here. Also, if market break this low, this one is a called change of character. So let's see what happened next here, and simply you can sell here based on the flip entry module. Flip entry module work something like this. Market tap on this order block, and then what happened? Market give a small reaction maybe here and then fail. So if market fail this one, you can sell here like this. Okay, so this one is a possible first entry criteria is here, and the next possible entry is here if market moves something like this. Okay, but market create inducement like this, and market tap here and push upside, taking out the inducement and push downside. So you can simply sell here directly without inducement. In this case, you need a wait for inducement, taking out this inducement, then you can sell. If there is a no inducement is here, you can sell here, but market must be taken out this inducement. So you can understand like this, to confirm any buy or sell entry, price must be taken out the liquidity and price must be taken out the inducement. So same thing. So in this case, what happened here? In this case, as you can see, market push downside and take a small pullback is here, and this one is our valid inducement, as we know, as per the candlestick pullback, because this candle taken out the previous candle high and this become our valid pullback. So we can simply sell here if market break this low. So let's see what happened next here, and this one is our inducement at this point. So this become our inducement and we can sell here if market break this low. So when we can consider this demand is a fail, first one is here if market break this low, because market tap in a first attempt and market again push downside and break this low. So this become our failed demand zone and we can simply sell here. So let's see what happened next here. Finally market break this low. It means now this market is not valid for the buy. Momentum is a bearish, market take the previous measure high, which is a first indication for the reversal. So simply you can sell here. In this case you have to identify where is our order block. So first one is here. This is our last buying candle before the drop. This dark candle is here, okay, and this one is our last buying candle before this drop, but this candle is mitigated by the next move. There is no imbalance available here. So as we know, we can shift our order block on the next candle, which one is here, right? So this become our next PY in a lower time frame for the sell entry module if price tap here and mitigate this one, and if we can simply sell here. Okay, why? Because price tap on this demand and failed and create a new supply, but market taken out the inducement. That's why this become a valid. If market not taken out this inducement, simply tap here and break something like this, okay, then you need to wait for create a small pullback is here and push higher, and then you can sell here. So this become our next entry. So this become our next possible sell entry is here. So let's see what happened next here. So we can sell here at this point and put the stop loss just above it. And why we are selling here? Because proper imbalance available here. This candle low here and third candle high is here. So this is our valid proper imbalance available here, and this is our proper order block, and this one is our valid entry criteria for the sell, and the target will be measure low, which one is here as per the 15 minute. So this one is our 15 minute measure low as per the target, and this one is our entry, right? So simply you can sell something like this, and this type of entry will be explained in upcoming chapter, so no need to worry anything. This is just explanation that how we can take entry based on the flip. This is just explanation that how we can identify IFC candle and how we can react in a lower time frame. So let's see what happened next after this one. Okay, finally market mitigate this order block, and now this entry is a mitigate here, and we can add more position is here, something like this. Market break this low and create another possible entry is here based on the single candle mitigation. There are different type of entry is possible here, but we are not adding any more position, just explanation that how IFC is a work here. Okay, all right, so working good. Okay, fine. Okay, perfect. So this one is our entries based on the IFC candle, and simply you can sell here as per the 15 minute higher time frame previous measure high or low sweep, which is act like a IFC candle, and this is a very interesting. Why? Because this one is our POI, means price of interest, when we can take risk for the buy or sell. Simply you can see here at this point, this one is also act like a IFC. Why? Because momentum is a bearish. Once market break the previous high or low, means sweep the previous high or low, which act like a POI, you can sell here into lower time frame, but this is an internal structure, but this one is our major structure. If major structure is a sweep, which is a strong indication for the reversal, and this one is our small reaction. Why? Because this one is our internal structure. Okay, so probably you have to focus on major high or low sweep. When they sell, when market sweep the previous major high or low, you can simply sell into lower time frame confirmation. This is an interesting and very powerful way to identify. This is an interesting and very powerful way to identify POI. Only order block is not a POI. Order block just additional confidence for the POI identification. Main thing, you have to identify liquidity. Identify liquidity and find a POI and buy and sell. Right, to identification entries explanation, which will be covered in upcoming videos in upcoming chapter, so no need to worry anything, and watch this video multiple time. If you not understand, you can rewatch this video multiple time, and this will definitely help you to identification POI, identification IFC candle, and I will see you in the next video. Happy trading.